In this video, I'll show you a very simple set of tools that you can use to analyze any investment. I'm going to show you Bitcoin as an example, but you can use these tools for other crypto assets or any other asset that exists. I'm going to show you how to chart the asset and compare it to others, and then we'll look at figuring out the growth rate of the asset itself so that we know when prices are a bit high or a bit low in relation to that trend, and that's really important for investing. Then we'll go into figuring out the possible investment return that we can make from this asset so that we know over a given time frame how much we're actually expecting to make, and then we can compare that to other investments and see how much we actually want to put towards any particular investment. I'll leave timestamps for everything down below in the description. Firstly, I'll show you how I chart Bitcoin, and it is a little bit different to a stock because Bitcoin isn't a stock and it doesn't have any earnings, and we're not looking at a price in relation to its earnings. We're just looking at a monetary asset and a network that is growing over time. And so I'm going to change to a logarithmic chart, and that's going to give me a much better idea of the trend rate of growth of BTC, because BTC is a monetary asset, store of value, money, and it's a network as well. So on TradingView, and TradingView is free, I'll link them below, but you can just click that link, go through if you haven't got an account yet, and you can get this totally free charting software. There is a paid version, you don't need to use that. Go to all-time history index, click this for Bitcoin. So search for Bitcoin up here, or BTC USD, go to all-time history index. Bottom right, you want to click logarithmic right here, not regular, logarithmic. We're going to right click, reset chart view, then just zoom out. And that is the trend rate of Bitcoin's growth. You can see the adoption curve very easily. Technologies and networks have adoption curves where, as the network gets bigger, its rate of growth slows a little bit, but obviously still getting larger. You can very clearly see that here. So what I'm going to do is go to the left-hand side, click the brush, go to curve right here, and just try and fit this on, just so you can see the adoption curve of BTC. It's very clear that there is a curve of adoption, and that's going to also show us something about the price of Bitcoin. So the price of Bitcoin is almost never right at its trend rate of adoption, right? It's either above it or below it. And we know that Bitcoin has bull markets and bear markets, but you have huge outperformance in the price here. And that means the price is expensive in relation to the trend, which is this line we've drawn. And then you have these areas where Bitcoin is very, very cheap, or the price of Bitcoin, right, is very, very cheap in relation to that overall trend. And that's about as simple as you can get in trying to figure out the rate of adoption and when prices are a bit expensive or a bit cheap in relation to that trend. Now, going a bit more complex, this is my chart, and you've got a lot more information on here. For example, we have the halvings in blue, these blue lines here. This is the trend rate in orange, and then I've just copy and pasted that to the lower line and the upper line here, because I want to know, if we project forward, where Bitcoin potentially may top out in a bull market and bottom out in a bear market based on just carrying on this trend rate of growth. Now, the other thing that I've done is tried to figure out where the price of Bitcoin is going to go in the future. So what I've done here is gone to indicators, search for moving average, like this. Moving average simple is fine, and it's this one here. Now, what this is a moving average of the price of Bitcoin over 200 weeks. So make sure you're on the weekly chart here, and 200 periods. If we go to settings, length is 200, that's 200 weeks. Okay, so 200 week moving average. Now, that is a smoothed out line of the Bitcoin price. You can actually think of that also as the trend rate of growth of the asset, because you're taking price data over 200 weeks, and then when the next week comes, you knock off the 200 weeks ago and you move it on and you plot that smoothed out line of the price. Now, if you invest in Bitcoin regularly and have done over the last 200 weeks, about 4 years or so, then your cost basis is this moving average. So right now, if your cost basis is this, you're making profit because the price itself is way above that. Now, when the price goes below this, you're actually in a loss if you've been buying for 200 weeks, right? You can see here, people are actually in a loss there. Then the price moves up. So what I've done here is I've taken this 200-week moving average and I have plotted a growth rate over the next 8 years or so. And I will get onto what I think that growth rate will be in a second, but that's about as simple as you can get in charting the asset, putting halvings on here, putting a 200-week moving average on, putting a trend rate of growth on, and trying to extrapolate that into the future. I go into much more detail in the Crypto Investor course about Bitcoin's rate of growth and its volatility, and how you can figure out exactly what you want to gain access to. All the investable asset classes, these two videos right here, with the volatility of them and the rate of growth of them. then you can put them together in a portfolio that gives you exactly the volatility and rate of growth that you want. And you can do that over many years. And so go and watch those videos for sure. I'll link it below. I also update the course for free. There's like 300 videos now on technical analysis, trading, how to actually go ahead and trade on trading systems, and all of my updates and research come for free as well if you have the course. I'll link it below. Sticking to Bitcoin's rate of growth though, what we can do is figure out when the price is quite high in relation to its trend rate. So this orange line here, Bitcoin almost never is at its trend rate. It's either above it or below it. So the first thing is to use the 200-week moving average. This is the most simple technical analysis you can do. Bitcoin isn't volatile if you invest over a long period. You reduce volatility by buying regularly over longer periods of time. If you did that for the last 200 weeks, then your portfolio actually looks like this white line, which is not very volatile at all. You reduce volatility by dollar cost averaging and extending your time horizon. And the volatility is actually good over longer time horizons because that's what you need to lift the price up above your cost basis. So if you're trying to time things a little bit better, then obviously there are areas where Bitcoin's price is quite low in relation to its trend rate, which is an awesome time to buy, and areas where the price is very high, which isn't the best time to buy, especially if you have a 6 months time horizon or lower, because you're just buying at a high price in relation to that trend rate. And the trend rate's important because the trend rate, it's not going to be 1,000,000,000%, right? We know within reason what that should be, and I'll get on to what that exactly is in a second. But what we can do on the chart is draw either a circle or a box, and we can figure out pretty clearly, right, that this area here and this area here, these are areas where if the price gets to, it's not very good value in relation to its current trend rate of growth, right? So you can figure that out, essentially anywhere near this top line. If you have a long-term time horizon, it's not the end of the world buying here. If you bought at the top in 2017, you spent $14,000. It's now $100,000. In the last cycle, if you bought Bitcoin at $57,000 at the peak, it's now $100,000, right? So it doesn't matter if you have a longer term time horizon, as long as you buy and certainly buy low. Now, if you just flip these as well, so you go to the bottom end, anywhere that anytime that Bitcoin is anywhere near underneath this trend rate of growth is an insane opportunity to buy Bitcoins when it's priced very, very cheap in relation to that trend. So you can put that basically this whole bottom line here, right? So that's important. Now, that's easy to look at. If you use Onchain, this basically tells you exactly the same thing. This purple line here is known as the true mean price. Think of this as the actual price that the market has paid for BTC. They work this out by seeing Bitcoin move into wallets on chain, what price it was transacted at. And so this is what you can assume is the price that people paid for Bitcoin. Now, this is very similar, if you look back to the technicals, to the 200-week moving average, which is if you bought Bitcoin each and every week for 200 weeks, that would be your average price, right? Your cost basis. It's pretty similar. Now, this just shows us very easily where Bitcoin is quite high in relation to this realized price, or the true market mean, and quite low in relation to that. So when the Bitcoin price is underneath this, that shows that we've got a network growing at X% per year, and the price is now underneath that. That is a very, very good buying opportunity. That is when everyone's capitulating, everyone's scared, and it's not easy to buy there, but you do make the most money when you buy there. When Bitcoin is around this price, that's when the mean is, about zero, right? The zero line. It's actually exactly on trend. So you're not getting cheap or expensive, you're just getting exactly what other people are paying. When the price is very high in relation to the trend, this line here, then the Bitcoin price is quite high in relation to what other people have paid, or what the market has paid, or what the trend rate of growth is. So how do you use that? If the price is red here, again, it's not exactly a bad deal if you have an 8 or 12 year time horizon. You're still getting cheap Bitcoin. Bitcoin was like $3,000, $4,000 here, right? So in the big scheme of things, it's actually still very cheap BTC. For that cycle, it's getting expensive. That's another question. If you have a 6 month time horizon here, then you're taking a lot of risk because yes, the price can go up, it can also crash back to the trend rate. As we can see here, again, very, very highly priced BTC, and you would have done okay over very short-term time horizons, but if you had a 6 to 12 month view, then the price went back to the trend rate and you would have been sitting in a loss for a while there. And as we move up again, you can see right now, the Bitcoin price is a little bit higher than the true market mean or the average price of Bitcoin, but it's not crazy. It's just a network that's growing and you expect the price to be higher for most of the time, right? So when you buy Bitcoin, it doesn't matter what the price is, it matters what your time horizon is, right? And you have to figure out if it's 6 months or if it's 6 years, because that's going to influence where you buy. If you have a short-term time horizon, you have to be way more sensitive to the price being very high in relation to the trend because it may crash down. Also, if you do have money and you're in a bear market and you're looking to buy, if the price is anywhere down below this line, you're getting very, very cheap Bitcoin in relation to its trend, and you can maybe wait 6 or 12 months and a decent chance that the Bitcoin price is going to be higher. This is AVIV ratio. It's on checkonchain.com. Again, I'll link everything down in the description. You can look at it for yourself. What is the rate of growth of Bitcoin then, and how can we use this to figure out what investment returns we can make in this asset? You can do this for any other asset as well. You can do it for the S&P, for the NASDAQ index if you want to invest in those, or for any other asset. You need to figure out what's the rate of growth. So for Bitcoin, it's super easy. This is a compound annual growth rate chart. This is on Glassnode. I'll link it below as well. It's a 4-year annual growth rate because Bitcoin's halving cycle is every 4 years. But what this does is take the price 4 years ago, compare it to now. What's the difference? And so what is that growth rate over that time? This orange line is the growth rate. So what we're going to do is take the price away. That is Bitcoin's growth rate over time. And as you can see, as the market matures and as the asset matures, the rate of growth crushes down because as something gets bigger, its rate of growth crushes. So back here, you were looking at 200% yearly moves. Then it goes down to 100, 150%. Now it's crushing down to around 50% here. And you can see right now, we are much lower. Now, the reason being, if we look at the price again, we're comparing the price right now to the top of the last cycle. And we're comparing it to the highest price it got to there. Now, if you fast forward a couple of weeks or a month or so, we're going to be comparing this price to a price 50% lower. And so the compound annual growth rate is going to jump right back up to 30, 40, 50% if we even stay at the same price. Of course, we don't know what's going to happen in the future. So in previous years, you're looking at a compound annual growth rate here of around 50% or so. I think that's going to come down. And for me, I just make it easy and say, I think it will have a 25% growth rate for the next 8 years. Why do I think 25? The S&P index annualizes or has done over the last decade at 12%. The NASDAQ index, focused more on US tech, has annualized at 18%. Bitcoin has more growth than both of those, in my opinion. And it's monetizing at a faster rate. So I just called it 25%. Other people out there may say more than that, 30% or even more. For me, 25 is a good basis. Given an assumed growth rate, we can now work out what an investment will be worth over a certain period of time. I used to do these calculations manually, 1 plus r to the power of n, and the annuity investment calculations, you can just ask AI now. So the 200-week moving average price right now is 47,000. Given a 25% CAGR, what will that white line, that 200-week moving average, be after 8 years? It'll be around $200,000, given a 25% growth rate of that white line, the 200-week moving average. Now, your investment cost basis is going to be different depending on if you're already invested in BTC and you bought at lower prices, or if you start a little bit higher, maybe a little bit different. It's going to be more or less. And so what we can see here is that the amount invested, $100 a week for 8 years. You've invested around $40,000. Now, the return is, or the total value of the investment is $180,000. You've invested 40, so call it $140,000 in actual growth and return, which is around 350%. Now, it's more than that for the investments that you make now, because if you buy at lower prices, those trades, those buys, will be going up in percent much more than the Bitcoin that you're buying in 7 years' time, which is a much higher price. But $100 a week, 8 years, 350%. $140,000 profit on $100 invested a week, 40,000 total investment. Change these figures around. Change the 200-week moving average to something else. Change it to your cost basis. Change the amount of time. Change the growth rate. You can figure out more or less what is the investment return that you should be making. When trading Bitcoin, crypto, or any other asset, we also have to figure out what the costs are to buy and hold and potential taxes. So if you're selling Bitcoin or any other asset, it's an asset, and so it's liable for capital gains taxes. That is your cost basis, how much it costs you to buy it, your selling price, if you've made a profit, that profit that you made, that is liable to capital gains taxes, depending where you live in the world. There are ways to reduce this. For example, if you hold an asset for longer than a year in the US, you get a reduced rate. However, that may change over time. All these tax codes change all the time. If you put Bitcoin in retirement accounts like IRAs or ISAs or something like that, you may be able to get reduced or deferred taxes as well, which is a big difference because this investment return here is gross, not net of any sales or capital gains taxes that you pay, right? So there's two ways to gain access. The first one is the ETFs. So IBIT in the US and FBTC from Fidelity. Go to your IRA provider or whatever and see if you can put these in your retirement accounts to try and reduce potential taxes in the future if you sell. You also get a sponsor fee here. That is the fee that you pay for them holding the Bitcoin, 25 basis points a year. That's going to rack up if you're holding this thing for a decade, right? It's a good few percent of the dollar value of your assets given away, versus if you hold on a crypto exchange, maybe like Coinbase, they don't charge you any custody fees. Now, BlackRock are using Coinbase custody. Are you happy having your assets at Coinbase or another crypto exchange or in your own self-custody versus having them in an ETF? That's a decision you have to make. IB1T is the European version. This is from BlackRock, available in most European markets, not the UK for some reason. Very odd, but I'm sure they'll allow it at some point. But you either get these, you pay 25 basis points a year, and you may be able to put them much easier into retirement accounts when available, or you buy it in the spot market and you just hold it on a crypto exchange, or you hold it in self-custody. If you want to know about that, I've got videos on self-custody, using crypto exchanges, and how to get money into an exchange, how to buy crypto, how to withdraw it and everything. I'll leave that for all of the videos down below. And the Crypto Investor course is a complete course on setting up your investment portfolio with the amount of return and volatility that you need and desire over a certain period of time. Definitely check it out. I'll link that below in the description as well. I'm James, it's MoneyZG. Cheers for watching, and I'll see you in the next one.